Hello students, welcome to my YouTube channel Sun Academy. I am Naresh Sir. Today in this lecture we are going to solve a question of unit costing in cost sheet. As you can see, the given question is Sun Limited produced and sold 10,000 LED TVs during 2020. Particulars are as under: selling price per unit rupees 5,000, material of 1 crore, wages of 50 lakh, direct expenses of 25 lakh, factory expenses 50% fixed, office overheads 50 lakh, selling and distribution overheads 1 crore, out of which 60% are variable. That hasn't been written here, I am rectifying that. During 2021, production and sale of 15,000 LED TVs is estimated. In additional information, it is being said that price of metal will rise by 10%, direct wages will decrease 10%, office overheads will increase 5%, fixed selling overheads will rise 10%, rate of profit will rise 20%. Prepare cost sheet and tender sheet. Now students, first of all we will prepare its cost sheet. Now 10,000 units are manufactured. First of all, we will take material that is being used for 1 crore. And 10,000 units are manufacturing, so 1 crore will be divided with 10,000, so per unit will come to that 1,000. Wages are 50 lakh. So per unit will come to 500. Direct expenses that are 25 lakhs, so 250 will come to per unit. This is our prime cost, as we know. So 1 crore 70, 5 lakh, and here that will be 51,750 is the prime cost. Then after factory overheads are added, out of which there are fixed and variable. $75 lakh are total factory overheads. 37 lakh 50,000 are fixed and 37 lakh 50,000 are variable, so 375 and 375. This will give us works cost. That will be 2 crore 50 lakh, and this will be 2,500. 2,500 will be per unit cost. Then after office overheads are to be added. Those are 50 lakh. That means per unit will be 500. Per unit cost, office cost will be 3,000, and this will be 3 crore. At last, selling and distribution overheads are to be added. Now those are also fixed and variable. 60 lakh are fixed and 40 lakh are variables. This will be 600 per unit and this will be 400 per unit. So total cost per unit is 4000 and this is 4 crore. This is our total cost of cost sheet. Now sales is 5000 per unit, so sales is 5 crore and per unit will be 5000. 5 crore divided by 10,000. Here 5000 is already given as we know. So profit, total profit will be 1 crore and per unit that will be 1000. Now we will come to tender sheet. Here 15,000 units are estimated to be manufactured and sold. So first material, that was 1000 per unit. Now it has increased 10%. So that will be 100 and per unit will come to 1100 multiplied with 15,000, 1 crore 65 lakh will be the amount of material. Per unit you will take it from here, then after you have to increase 10%, total 1100 into 15,000. Wages per unit earlier were 500, now those are said to be reduced 50%, 50 rupees, so per unit will come to 450. 450 into 15,000, that will 67 lakh 50,000. Then after direct expenses, nothing has been said for that, so those will be remain as it is. 250 into 15,000, 37 lakh 50,000. Now per unit will be 450 plus 1100 plus 2, 1800 will be our prime cost. This will be the prime cost of tender sheet. Material was taken as it is 1000, then after 10% was added, 1100 per unit will come the cost of material per unit, then after multiplying it with 15,000 we will get the amount. For wages 10% is to be reduced, 450 will be per unit and multiplying it with 15,000 that will be 67 lakh 50,000. Direct expenses will remain as it is, so 250 into 15,000, 37 lakh 50,000. Now comes the number of factory overheads. Is anything being said? Nothing has been said for factory overhead, so fixed will remain as it is. Fixed were 37 lakh 50,000. Here you have to write the amount. 37 lakh 50,000 will be divided by 15,000 and you will get amount per unit, that is 250. 37 lakh 50,000 divided by 15,000, 250 will be fixed factory overheads. In fixed you have to put amount as it is, which were earlier, and is to be divided with 15,000. 37 lakh 50,000 divided by 15,000. Now for variable, per unit will be same, 375 into 15,000 and we will get the amount. ₹56 lakh 25,000. This will be our work cost. And what is that? 1800 plus 250 plus 375. 2,425 and 3 crore 63 lakh 75,000 is the total amount of work cost. Then after comes office overheads. Is anything said about the office overheads? Office overheads will increase 5%. Earlier those were 50 lakh plus 5%, that will be 2 lakh 50,000. So total amount will 52 lakh 50,000. And if I divide it with 15,000, per unit will come to 350. 52 lakh 50,000 divided by 15,000. This will be our office cost. $2,775. 4 crore 16 lakh 25,000 is the office cost. Now will come the number of selling and distribution overheads. For that, fixed selling overheads will rise 10%. Fixed earlier were 60 lakh. Now 10% is to be increased, so that will be 66 lakh. 66 lakh will be divided with 15,000 and we will get the amount per unit as 440. Then after variable are 400 into 15,000, so that will be 60 lakh. variable are 400 into 15,000. Now total cost will come per unit as 2775 plus 840, 3615, and 4 crore 16 lakh 20, 5,000 plus 60, 6 lakh plus 60 lakh, 5 crore 42 lakh 25,000. Now for profit, it has been said rate of profit will rise 20%. What was the rate of profit earlier? On 4 crore 1 crore was profit, on 4 profit is 1, so on 100 that will be 25%, but now it increases 20%. So on 25, if you increase 20%, 5% will increase. Now you have to keep profit as 30% on cost. Earlier it was 1 crore on 4 crores, so that comes to 25%. Now you have to increase 20%, so 5% will increase. You have to keep 30% as a profit. So 3615 into 30%, that is 1084.5. So sales is to be kept 4699.5. 1084.5 into 15,000, so profit will 1 crore 62 lakh 67,500 plus 5 crore 42 lakh 25,000. So total sale will come to 7 crore 4 lakh 92,500. This is total cost, this is profit, and this is amount of sales. Now let's repeat and check, so we can find that there isn't any mistake. Material was to be increased 10%, so it came to 1100 into 15,000, 1 crore 65 lakh. Wages will decrease 10%, so 450 into 15,000, that came to 67 lakh 50,000. Direct expenses were to be kept as it is, so that were 37 lakh 50,000 plus 67 lakh 50,000, 1 crore 65 lakh, that came to 2 crore 70 lakh. Now factory overheads, for that nothing was said. Fixed were to be kept as it is, 37 lakh 50,000. 37 lakh 50,000 divided by 15,000 comes to 250, while variable per unit will be kept as it is. Remember one thing, variable is always kept per unit as it is, while for fixed amount is to be kept as it is. Now this amount was divided with 15,000 and we came to know that 250 per unit is the cost of fixed factory overheads, while variable total cost will come to 375 into 15,000, 56 lakh 25,000 plus 37 lakh 50,000 plus 2 crore 70 lakh, that came to 3 crore 63 lakh 75,000, and per unit came to 2425. Now there was a number of office overheads. For that it was said 5% is to be increased, 50 lakh into 5%, 2 lakh 50,000, 52 lakh 50,000, total came to 3 crore 63 lakh 75,000. So 4 crore 16 lakh 25,000 and 2775 is the per unit office cost. Now selling and distribution overheads, fixed were to be increased 10%, so 66 lakh divided by 15,000 came to 440, while variable per unit were to be kept as it is, so amount came to 60 lakh. 60 lakh plus 66 lakh plus 4 crore 16 lakh 25,000 came to 55 crore 42 lakh 25,000 plus 30% profit was to be added, so sales came to 7 crore 4 lakh 92,500 and per unit came to 4699.5. In this way, tender sheet is to be prepared. First, you have to prepare cost sheet, what is given by taking it as it is. To prepare tender sheet, what adjustment are given, you have to give the effect of all these adjustment and you will find the tender sheet. Now, if you want to learn this chapter, do continue. If you haven't subscribed, do subscribe, do comment and do share the link of our channel so that other students also can get the benefit of good learning.